Kirk Duckwall here with the House Geeks with your Twin Cities real estate forecast. Are we seeing more buyers engaging into the marketplace over last year? Well, we'll get into that here in just a second. But first, I want to announce a couple of classes that we have coming up. First is home inspections and disclosures, navigation and negotiation. So for sellers, what disclosures do you need to be filling out? The different effects of the different disclosures and addendums. So whether that's trying to sell as is or doing full disclosure, what inspections are required as a seller, but also from a buyer's perspective. What should you be looking for in disclosures, red flags that you might find out there, and which inspections should you be looking at getting done? So that class is coming up this Saturday, 21st in Roseville, 10:30 a.m. Still have a few spots left. I'm going to put a link in the comments for that. And our hack home buying class, great for first-time buyers, second, third, and investors, doing a deep dive into the best strategies, tools, techniques as you approach the home buying process. All right, let's dive in to the home buyer activity as mentioned. So we were tracking significantly behind last year in January, and that's due to multiple circumstances that we were running that. And as we came out of January into February, we started to actually get ahead. And we have been tracking ahead, all of that until, well, yesterday with the big snowstorm. So Sunday's snowstorm absolutely impacted the market as far as showing activity, bringing it way down. But we expect to see a jump back and a recovery from that. So talking about buyer activity. So the first thing I want to mention is new listings. We're watching new listings picking up. So possibilities, opportunities, whatever you want to call it, for home buyers. They're seeing these new listings and they're getting engaged. However, as new listings is rising, well, so has pending sales. And so we are seeing this buyer activity that's really kind of taking off. I mean, this is kind of where we were in that January timeline, and now we're getting into pretty hot buyer activity out there. But simultaneously, we have pretty low homes for sale, right? So, yeah, we're going to get to here with a lot of homes for sale in our marketplace, but that doesn't happen until August, September timeline of total inventory. So, yes, we have homes coming onto the market at a decent pace right now, but because of the amount of buyers that are involved, that it's pulling that inventory right out. So we are only 200 listings off of the low point for the year. And this is having direct impact on home prices. Okay, so, December, November timeline, home prices, pretty quiet out there. October even, right? But because we're so low on inventory for the first-time home buyer market, we're in this peak timeline right now. This is the absolute peak, right? So if we look back at last year, it says peak was in April. Well, move that timeline back 30 to 60 days from when those homes actually went under contract. So that is where those went under contract. Those prices were locked in. So yeah, we're coming up off the bottom, but realistically, March timeline, we're actually heading towards that peak. Now, for higher price points above 500, it's a little bit cooler depending on where you're at. And then those $1 million plus homes, those tend not to get into that absolute hot range for about 4 to 6 weeks later. So, and that's because people in that price point typically have a home they need to sell, get under contract first. Not all buyers, but a higher percentage of them. Okay. As far as where does that put our market meter? Yeah, we come out and now we are at like a 5.58, but a lot of that, and so that's stable market range, stable market, but we're heading towards our peak. I actually think this is projecting kind of like those weather models. This is projecting a little bit low. Because we're at the 5.58, but had yesterday's snowstorm not happened, and we look at all the activity leading up to that point, then we actually would be at a 5.85, right on the edge of like full-on seller's market across all price points. So yeah, I think this peak that they're giving on the forecast is off a little bit. I think we will break through into full-on seller's market. It's just going to be a few weeks delayed. A big factor in that, though, is going to be where interest rates land. Now, 10-year Treasury, we are seeing some good news there. We are seeing things ease as some concerns about oil shipments may be coming down. We'll see ultimately where that goes. But yeah, this is the impact. Friday, we watch interest rates move up a good chunk up to 6.41. Keep in mind, just a few weeks ago, we were below 6. If we can watch the market kind of work its way back on those rates, I do think we actually still have a hope for a decent seller's market as we go out about 30 days. Again, we are about 30 days behind in our activity right now. All right, hopefully you found this information valuable. If you would like to know what the market is for your house and the market forecast, please feel free to reach out to me. You can reach me at housegeeks.com. Give me a call, 651-303-0019. Or you can email me at kirk@kirkduckwall.com. I'll have all the information again in the remarks. Take care and have a great week.